Hello everyone. Welcome to Wednesday morning's live stream. Really glad that you're here. If you're here for the first time, welcome. My name is Tyler. I'm glad that you decided to hang out with us this morning. It's going to be a good time. We're going to be talking about futures, trading, the market, ICT concepts, fair value gaps, order blocks. We're going to be talking about order flow, all that good stuff. So if you're here for the first time, stick around, consider liking, subscribing, and ask any questions that you have in the chat below. Also, if you're looking to take your trading to the next level, you can do so by using the code DTJ at the top of your screen on the different accounts or different providers there. There's very good value in multiple of these companies, and I have used all of them. So I recommend using them or checking them out. If you have questions about a particular evaluation or a particular prop firm, let me know. I'm happy to answer any of those questions. But that code will give you always the best discount that any of these firms are offering. With that, let's go ahead and open in prayer. I'm excited about today. I feel pregnant with possibilities, pregnant with the possibilities of what the Lord wants to do, not only in your guys' life, but also in my life. And I'm excited. So, Father, we just come before you this morning, and I just thank you for the opportunity that I have, that we get to trade, that we get to connect with other believers, that we get to see your kingdom advanced. So, Father, I just pray that you would give us wisdom, you give us understanding, that you would be in the midst of our trading. Father, we choose to bring you into our trading. We choose to submit to your leadership in our trading. We choose to not bow our knee to our own emotions, but we choose to bend our ear to you. So, Father, we thank you, we trust you, and we trust the process and the journey that we're on. And I pray for everyone here that they would see increase, that they would be blessed in everything they set their hands to, that they would be blessed. The Bible says that He, through his divine power, he has given us everything we need for a godly life. And I believe that today you have received everything that you need for today to fulfill the calling of God on your life today. So let's make it happen. Father, we thank you in Jesus' name. And everyone said, amen. Amen, amen. Good morning, everyone. Nicolo, and Anant, Johnny, Mr. G, Jason, Johnny, John, Mr. G, Vintage Trader, good morning. William, Michael, Abigail, Corey, how you doing? Glad to have you guys this morning. If you like opening every morning with a prayer, if you like that, if you think that's good, and you want more of it, hit the like button for me. I would greatly appreciate it. Yes, we have to play the like game. We have to play the YouTube algorithm game, so I have to do all those cringy things. Hit the like button, subscribe, do all the things, all that kind of stuff. We have to. It's part of the game. It's part of the game. All right, so let's take a look at the market. We are sitting here on the 15-minute time frame. We took a trade yesterday, 2 all-time highs. We got off. I didn't take any other trades on my funded accounts. I took a personal trade, just a small little trade, but I was pretty much off the rest of the day. And now we've pushed even higher. Very interesting to see. When you're at all-time highs, it's hard to determine where we could go next. So I want to submit an idea of how to determine if we break through, if we're going to push through highs again. How do we know if we're going to make a higher high? How do we know if we're not? I want to talk about a little about some of that here today. We'll get into that, but let's first go over the market and see what we have. We've already ran our London high. You can see that right here. And we still have our London low. Okay. From an hourly perspective, it's just higher we go. We do have an hourly fair value gap conveniently sitting right here. I like that, where that's at. I'm assuming that's overlapping. No, I don't think that's overlapping. We'll see what that is. And then if we look lower, if we look down to the London low, we have Asia low right here. Why is this Asia low? Anywhere between 8 and midnight. 8 p.m. and midnight is Asia lows. And the reason why I'm selecting this one here is we have London low and there's no fair value gaps on the hourly. It just goes straight to the Asia low. And then we don't have any fair value gaps until right here. This 12 p.m. fair value gap is the last hourly fair value gap before we reach our previous all-time highs. I'm not going to mark that right now. That seems a bit of ways right now. We're kind of doing reverse. We're going through it backwards right now. So this is the 4-hour time frame. 4-hour time frame found support in that hourly, moved higher, created a fair value gap, put in a 4-hour order block, and now it's moved higher again. Okay, so we have a 3-step process that we have to go through to determine our bias. Now, I haven't written out my bias today because we're at all-time highs. When you're at all-time highs, the bias is bullish. It just has to be. However, just because we have a bias that's bullish doesn't mean we can't have a narrative that goes lower and we take the trade based on that narrative. Okay? So our bias is bullish, but the narrative that I want to see is what we're going to figure out here this morning. Dropping back down to the 15-minute time frame, we have made higher highs, made a retracement, made a higher high, and now we're sitting 7 minutes before the market opens. If we look at the 5-minute, we don't have any fair value gaps. No fair value gaps anywhere in this price action. The only fair value gap we got overlaps right here with the 15-minute. Okay? This is going to go in when, how do we know if we're going to make a higher high? This is going to be going into that conversation. So we have our overlapping 5-minute and 15-minute, which overlaps with these levels right here. Do you see that? Okay? We have a low, high, lower low. I'm putting this together on the spot here, folks. I haven't looked at the market since I sat down. So we've made a higher high, and then we have a retracement down to the 5-minute fair value gap that we just marked, and guess what it overlaps with? It overlaps with this breaker that we just marked out. So I'm already liking this area. I'm already interested in a retracement to this area. So we have two options that we can do. We can take the trade to this area, or we can take the trade from this area. Okay? How would I want to look at that? Well, if we make a higher high, I want to take the trade from the higher high to this area. If we make a lower high, I would want to wait and take the trade from this area higher. So right now we've made a higher high, so I'm more interested in taking the trade to the 5-minute fair value gap. If we did something like this, I would now want to wait until we come to this area and now target these areas for my trade. When we make a higher high, liquidity is grabbed. I want to now take that down to this level. We want to take the short. If we make a lower high, I want to wait for the retracement and then take the trade to the liquidity, which was created by that second push higher that failed to make the higher high. So what am I saying? We have to look at the market as, where is liquidity being generated? Is liquidity being generated to the upside when we make a higher high? No. Let me rephrase that. Is liquidity being generated for shorts for the downside when we make a higher high? No. What is it inducing? What is it creating? It's creating longs. More buyers are interested in going long when we make higher highs. So what is price more likely to do when there's more buyers interested in going long? The market's probably going to run the opposite direction. If we fail to go higher, what is that inducing? It's inducing the idea that we might go lower. So if that's the idea, we want to wait until we go lower, and then price wants to make all of those people that went short hurt. So we want to go long in those scenarios. So right now we're making the higher highs, and until we don't, I'm going to sit on my hands, but this is the area that I'm interested in as of right now. Let me shrink my face now. I don't think I messed anything up by doing it on that screen. So, ES has made its all-time highs, and that's kind of where things are sitting. I'm going to go ahead and get my charts or my accounts opened here. I haven't done that yet. Johnny 4JC, awesome, my friend. Congrats. Been passed, well, I'm saying that you've passed your evals. So past several prop firm evals, been quite near to payout still. I couldn't, and blue accounts. My problems are lack of discipline and layering. Advice, yeah, watch the last video that I made, I made about how to overcome the mental game of trading. I talk about, the only reason I'm saying that is I talk about this specifically. It is an issue every trader will and has to overcome to take their trading to the next level. And then when you make it to the next level, guess what you're going to have to do? You're going to have to overcome it again. It's a continual process, and it is a skill that must be learned, and it will be exercised multiple times in your trading career. I've had to go through it multiple times. Just a couple weeks ago, I had to do it again. So how do you do it? I explain it in that video. All right, there's market open. I did not take the 930 model. I didn't have anything open at this time. But it played out nicely. I believe we have news today, or had news. What did we have? Today's Wednesday. Trump speaks at 10:15, 11:15. Is it 11 or 10? I'm pretty sure mine's Central Time here. For those that don't see it, I'm looking at that right there. So today's Wednesday the 13th. We have Trump speaking at 10:15. Now, with this volatility, if we just run lower here right away, then obviously that narrative is gone, right? If you look at the 4-hour, we will have a 4-hour fair value gap created here shortly. We'll see if it stays open. I'm just going to mark it out for now. And see if we end up creating that. This is that fair value gap. So once we create that high, we may either find support here to move higher, or it just might melt down to this 4-hour fair value gap. And if it wants to pump, that's fine. I'm not going to participate in the pumping. I already had 930 run the other direction, so I'm not interested in any of the pre-market or 930 pump here. Oh, I'm sorry. I've been just sitting on this screen. There we go. Sorry about that. Yeah, I think he's trying to sue Powell, or probably not. He's bringing it up. He's all about the publicity. He's all about the pressure, and he wants to add the pressure to get what he wants. And rightfully so, I think he should. I mean, the rates should have been lowered a long time ago. What's up, Lincoln? What's up? So yesterday we did a giveaway, and a few of the people that accepted the giveaway, I didn't realize were not in America. And if you're outside or if you're in Africa, the Apex promotion does not work in some countries. So we're going to be doing another giveaway, like I said, next week, and we'll do some of those giveaways there. But just keep that in mind. If you are in another country, Apex will not work for that. I have reached out to Take Profit Trader to see if they would do a giveaway where I could give away some accounts. If I get some answers back on that, we will look to do a giveaway. But man, if they're willing, I'll give away as many accounts as, if they say they're going to give away 100 accounts, I'll give you guys 100 accounts. That would be freaking sweet. So, all right, we have our first presented fair value gap here. We need to stay alert because the market literally could drop at any moment, in my opinion. We just made a higher high. Now, when we make higher highs, I don't expect a higher high to be made once we make a low. I want a lower high to be put in. So it's either going to continue to pump, or we're going to find some resistance here, and then we can look to take a short. It has to be short term. It can't be long term here. You could also take that reaction on the first presented fair value gap and try to take a long. I won't take those. The only way I'm interested in a pump higher is if 930 candle is also bullish. But it wasn't. It went lower first. Now, I haven't put on here the opening range gap. I probably should do that. I'm assuming it's going to be very large. That's our opening range gap. It's huge. MFFU. I know the name of it. I have an opinion on it. I'm trying to remember. No, Top Step is one that I don't like. My Funded Futures. That's what it is. I don't think there's anything wrong with him. I don't like the monthly. What was it? I think it was 80. Yeah, I would compare them to Take Profit Trader. That's what I would compare them to. Don't let your emotions mix with the logic of your plan, okay? If you want to go short, you have to have your model to go short, okay? I'm not going to take an inversion into an order block, which is also a breaker. Very small breaker, low, high, lower, low. That's a breaker right there. But I mean, I'm not going to take that. I need to show evidence of price wanting to move lower, or I don't take the trade lower and I wait for support and then I take another trade long. No, it didn't. I told you that in gold, I honestly didn't expect it to turn around so fast, but what did I say right in that gold area, that at that daily fair value gap, there's a high probability we're going to see higher prices from there. That's what we got. My 3 plans I wrote down. Oh, yes. Thank you, Vintage Trader. For those of you that were here yesterday, this is the most people we've had in our stream so far. 219 people. Thank you guys for hanging out with me today. Yesterday, we had a very important conversation about putting together a plan. I love this right here, guys. I'm not going to lie. My plan is playing out in front of me. I want to take a trade right now to the 15 and 5 minute fair value gap, but I have to have a model. My narrative is higher prices. If we make a higher high, I'm willing to take the low. If we make a high but make a lower high, then I'm going to wait for price to do this. But right now we have a breaker. The breaker is right here. Let's see if that plays out. We have a high, low, higher high. Do we break lower beneath the first presented fair value gap? And if we do, give us a tag right here to take a trade lower. I'm all in on that. No, I'm not in a trade. Nothing right now. It hasn't happened yet. But yesterday we talked about, if you go to my Twitter feed or my X page, you'll see a post from yesterday that says, make a plan, follow the plan. And the struggle most people have is they have a plan, but they don't freaking follow the plan. So I gave homework yesterday to everybody in the live stream to put together a plan and bring it here and share it in the chat for accountability. Yes, are you ever going to see these people in person? Probably not. But there's something about putting it out there for everybody to see that is, there's a level of accountability even in that. So for the level of accountability we can get in this stream, that's what we want to do. So if yesterday you put your plan together, I want you to share your bullet points in the stream. If I haven't seen them or it gets lost in the stream of comments, keep putting it in there until I see it. But I want to make sure I'm putting attention on each person that is willing to take that step, because it's very important. Making a plan is step one. We have two parts of ourselves when it comes to goal oriented, trying to accomplish something. There's two parts of us. We have the planning side of our personality, and then we have the execution side of our personality. The planning side has, oh yeah, we're going to do this, it's going to look like this, it's going to be great, it's going to be fantastic, we're going to get all this done, I'm going to see everything I ever wanted to see. And then the execution side goes, oh my gosh, this is a lot of work. I don't know if I want to do all this. So you got to keep that in mind. Keep that in mind when you're creating this. Give yourself grace as you're putting your plan together. And if you mess up or you don't follow through, revise your plan. Don't throw the plan away. Don't walk away from the plan. You can't do that. Revise your plan and then try again. All right, so we got 20 seconds for this to close. I want a retest. So I want this to close here and I want it to retest. I don't know if we're going to get it though. Actually, I'm going to take the trade right now. I am in this trade. Moving lower. We're looking for the 15-minute, the low, or the 5-minute. All those are okay. So that's 24.17 or 24.11. So we're looking right here. Let's see if we can get that. I'm going to put it right at the swing low right here. And I'm going to sell 4 contracts at that level. And then I'm going to hold a runner and see if a runner wants to give it to me. Now, technically, this needs to go up towards the high. It's a large stop. This is going to be 30 handles about. But for me, I think this is worth taking. Do I feel nervous? 100%. Am I concerned that it could just pump higher? Absolutely. So don't let this stoic face throw you off thinking that, man, this guy's just, he's built for this. No, I'm nervous. All right, right here, we have to consider moving our stop because it's swept below. I'm wanting it to push lower, but it could absolutely reverse right here because we did sweep below. Okay? I'm putting my interest level just a little bit lower because of where my position is. So I'm hoping for another push lower. You could take some off, and it's not a bad idea to do so. I'm going to take 2 contracts off. Main reason is because we swept a low. Now it could have permission to make a new high. And that's the biggest thing that I want to avoid. I'm going to set a take profit there at the 15-minute fair value gap. And I will set a second one there as well. I really don't like that inversion. I want to see that inversion fail and not move higher. It could sweep that candle. It could sweep that small little candle there. That's okay right here. The 944 candle. But that's all I would want this inversion to do. I don't want it to continue higher. For obvious reasons. Matt, no, the nervous isn't about too much money. It's about wanting to perform in front of people. That's really honestly what it is. It's wanting to be right in front of 220 people. But I'm just telling the truth. That's just the truth. I'm not gonna fake what's going on. It's not gonna change what I'm doing here. I just don't see a reason to push higher here. I mean, I would want it to come a little bit lower to then push higher. It could absolutely go higher. I just don't know if it's going to be right here or not. London low's way down here. Do you see how low that is? If we get some real displacement, that's where I'm going to hold my runner to. See if it wants to give it to us. I'm going to put this right at the high here, because that's when my trade technically would be invalid. There's no news. We're in the macro right now. I guess it could be waiting for Trump. But in my opinion, I would want to see it drop before Trump to prepare for that Trump announcement or whatever it may be. My logic is this, is that we just made a high here. There's no liquidity above this high right now. As soon as we create a failed swing high and we move lower at the moving away, we now have more liquidity. Sure, there's some liquidity, but now we have more liquidity. Buyer or sellers are thinking, oh, I now want to go short. I'm going to put my stop right above here because this moved away. As soon as we move away and we hit a key level, this now becomes a potential target because we have a high and a failed swing high with shorts thinking that this is a great place to put their stops. So they place their stops here. They're going to go something like this. They're going to go short. They're thinking it's going to go all the way down here to London low. And instead what happens, it comes down here, it sweeps those levels, and then it does a bigger move here. So what we're playing, at least what I'm attempting to play, is the fact that we've created a high. There's no liquidity or not very much liquidity up here. Once we move away from here, it gives us more liquidity for us to target later on. That's the idea that I'm doing. And it's off of this breaker and inversion that we took that based off of. Now, we did sweep liquidity, so it did fulfill part of its responsibility by grabbing liquidity on the downside. But I was just, honestly, was hoping for a little bit further to these 15-minute fair value gaps. That's what I wanted to see. Here's 15-minute. It basically wicked this 15-minute candle right there. You can see that right there. I wanted it to come down to this area right here. So that's what I'm still betting on, is that it's going to reach for this 15-minute and 5-minute fair value gap before it considers moving higher. That's what this trade idea is based off of. Those things. And so far, I like that little push away. Let's see if it holds and continues. That's what I'm calling a failed swing to the upside. And then it makes these lower lows. How low? I don't know. That's why I'm going to leave a runner on to see if it in fact wants to go to the London low or not. It may not. That's aggressive. Do you see that? There's my win, folks. Okay? I have one contract left, and now I'm going to let that run as low as it wants to go. Now, could it turn right here? Yes, it absolutely could turn. It did its responsibility. Do I want to move my stop to break even? The answer is yes. Unfortunately, there's a good chance of getting stopped out right here. So what I'm probably going to do is put this right at the top. I would love for a bigger move lower. So I'm going to let it do its retracement here. And then once we make a lower low, I'm probably going to move my stop to break even. And that's going to be that. So if we make this lower low here, I'm going to put in my break even and try to follow this lower. I don't want to move it too fast because look at that aggressive candle. That's an aggressive candle that I was anticipating was going to happen. I'm telling you guys, this stuff works. The biggest thing that's in front of, the biggest obstacle in our way is ourselves. fears, not wanting to lose, not wanting to admit loss, moving too quickly. I mean, all kinds of stuff. Let's see if we can see how we stopped and closed. Look at that candle right there. Look at that. Look at that. Look at that, folks. Let me delete that. Look at how we stopped right at that 5 minute. Okay. That's the 1 minute. Did we close on that? No, we haven't closed yet on the 5 minute. Victor, I'll get in that here in a second. Okay, what I want to see happen right here is us to close and move lower right here. I want it to drop back lower right here. And I want it to do it with aggression. If we can't make a lower low, I'm probably going to close that position. Or, excuse me, I'm going to move my stop. Actually, I will move my stop to break even now. Because I do not, from the entry of this, I want it to aggressively move away. We're at 9 o'clock or we're at 10 o'clock. This is the time that I want it to aggressively move lower. So I don't want it to flash higher because it's 10 o'clock. So positions at break even, allowing it to run lower. We'll see if it wants to go. We're right at the breaker. This is the point where it turns and runs our way. Now, what did it create here? Look at this. Remember what I said? There's now liquidity here. It could turn and run that way. I'm just betting it's not quite yet. That's what I'm hoping, at least. And if it is, well, great. I have my stop in profit by a couple ticks to cover my commissions and to not go negative on that. But wouldn't it be nice right in the next 30 seconds, we just get a massive candle lower? We're set up. We can just sit. We can sit and wait. We can receive that big drop that's coming our way. All the way down to the 4 hour. I would love for that. That looks like a good level. The 4 hour. Right at 10 o'clock. Which will have a new candle here in 14 seconds. We aggressively move this way right into that fair value gap. That'd be nice. Let's see what happens. Come on, make that lower low. There it goes. If this candle turns green, I'll close my trade because it is 10 o'clock. 10 o'clock, there tends to be lows and highs made. So if it turns green, I don't want that to be the low and it run back and stop my out. I'll take my trade in profit. But if it wants to continue lower here, I'll take that as well. What I don't want is this to close above that 10 o'clock candle. I want it to make a new low. I'm telling you guys, right at 10 o'clock is very important to pay attention to is how the 10 a.m., 10:01, 10:02, how those candles print. If it makes a lower low here, there's possibilities of lower lows. If it doesn't, there's a higher probability it's going to reverse. For a short period of time, long period of time, I don't know. But I want to see that lower low. There it goes. There it goes. All right, we got a lower low. Now, same thing for this one. We want to see another lower low. Right around that 10 o'clock time, it could just reverse at within that, first 2 or 3 candles, and that's what we're trying to pay attention to. Well, I would like it to hit this 4-hour fair value gap. That would be nice. I'm going to sell it there. I'm happy with that. It can make a lower low. I didn't want it to come back up, hit me at break even. Did I sell early? Yeah, probably. Probably. Did I have as much patience as I did yesterday? I don't think so. I didn't have as much patience as yesterday, did I? That's okay. All right. Either way, it's a win. Nice, solid trade. What did we get from entry to profit? What did we get? It was, we sold right here. Where did I get in at? I got in right here. Somewhere around there. So that was a 50 handle move, folks. That was 50 handles. I can't complain about that. Let me find out what the exact thing is. Hang on. Oh, where it is, right here. Okay, show fills, apply, save. All right, so entry was at 24.37, 37.50, and my final sell. No. So 32 handles. 32 handles. It wasn't 50. 32. I got in lower than I thought I did. I thought I got that on that push lower. Apparently it put me in at the bottom of that candle. That's not what I remember. But it looks to be what it is. So 32 handles on that trade. Not bad. I'm not going to complain about that. That gets the job done. Taven, awesome. Way to go. Okay, so a couple things. Let's do our daily affirmation. We've hit our target. If you appreciate that trade commentary, hit the like button for me. I greatly appreciate it. But we're going to go ahead and do our daily affirmation for today. I kind of couldn't decide what I wanted to do. So I did both. I couldn't decide if I wanted to do Romans 8:31 or Matthew 9:23. So I did both in them. So the affirmation for today is, God is for me. Nothing can stand against me. I believe without limits, and my faith makes the impossible possible. If God is for me, who can give? I want to emphasize something here. If God is for me, who can be against me? Okay? What does it mean? Who can be against me? Who can stand against me? I want you to understand, it does not mean that people are not going to come up against you. It means they won't be able to stay standing. They will bend their knee. The enemy specifically. I'm not saying that we have to be this proud, chest puffed out, we're going to, do all this and, our attitude. No, we approach everything with humility. But the reality is that if you believe the Word of God, you believe the Word of God is true, then therefore, whatever is standing against you will fall. It will bend its knee. You just have to believe that the impossible is possible more than your circumstances currently. If you believe that, man, I had a losing trade, I'm never going to get this. If you believe that, that's probably going to be your future. If you have a losing trade, but say, you know what, this sucks, but this isn't the end of my story. It's not going to stay this way. I'm going to persevere. I'm going to continue on. I believe the promises God has given me. I believe this is possible. If that's your belief, then nothing will be impossible for you. It all begins. I remember, and I've shared this before, when I was at a real estate seminar. I go to these real estate seminars because I grab my pen and notepad and I'm like, oh, give me the strategies. Tell me all the good stuff. Tell me the entry levels. Tell me the entry models. Tell me when I need to get in, when I need to get out. Tell me all the good stuff, because that's what matters. Because if I have the perfect strategy, if I have the perfect model, I'm going to make so much money. And every time I would go to these events, guess the first thing they talk about? The first thing they would talk about is your mindset. And I would be like, I'm like, you gotta be kidding me. What the heck is this? Why are we always talking about mindset? Just give me the good stuff. Let's skip all this. And then, as I heard it more and more and more, and I went deeper into my journey and commitment to excellence, it dawned on me. It doesn't matter what strategy you have. If your mindset is a failure mentality, if your mindset is a lacking mentality, if your mindset is never enough mentality, it's not going to work for you. Why? And what do I mean by never enough? You might be saying, well, that's not me. Well, let me ask you this. When something doesn't work the first time, do you throw in the towel? If something doesn't work the first, second, or third time, do you give up and go find something new? That's a lacking mentality. That's a give up mentality. Do you think that the people that are teaching you these strategies, teaching you these models, teaching you how to read the market, figured out on day one? No. As they did it, things clicked, and then something else clicked, and then something else clicked, and it added, and it added, and it continued to add to this now what is, here's my model. Here's how I look at the market. Learn from me. Hey, it works for me, and it's true. But some person out of the blue coming in and taking that model isn't going to see profitability right away. Because you have to make it your own. You got to see it yourself. You have to believe it yourself. You have to go through the fire yourself. When you see it fail, you got to answer the question, why did this fail this time? What do I need to do to make sure this doesn't happen again? Or was my mindset wrong? Or what, did I get in early? Was I impatient? Is this not the right conditions? You got to answer all of those questions. And as you go through that process, eventually you're going to get to the point where you'll have that success mentality, and it helps you persevere that drawdown period, that period where you can't see the light at the end of the tunnel, and now you make it to the other side because of your mentality, because of the way you think. This is how you see it through. You change the way you think. You have to believe. This is why I do these affirmations every day. There's our 4-hour fair value gap, by the way. Boom, hit it. This is why we do that. Because if you can't believe this, if you can't believe the word of God, you can't believe your Father who gives good things to his children, and you don't believe that, you need to go back to the source. You need to get your heart right. You need to get your relationship right with the Lord. You need to believe that he's a good Father. Believe that his promises are true. And then use that as your foundation to build off of. But if you're not going to do that, you can't do that, or you think God's not a good father, that he just, why did God do this? See, it always happens to me. It's like all these other Christians are doing great things, but then me, it's just never works out. God's just mad at me. He's punishing me for this. That's not God. That's a lie from the enemy that you've chosen to believe. You have to change the way you think. And if there's anything that I want this channel, anything that I want this community to be about, if what separates me from other channels is simply that we believe in a God of the impossible, that's what I want it to be. Because if you have the belief and foundation in that, your journey is going to be way more successful than somebody else that's learning from, you name it, guru, day trader on YouTube. It doesn't matter. If you believe that nothing is impossible for those who believe, you trust in the Lord, you're going to see more progress than the person that doesn't. That's the separation between my channel and other people's channel that I want to make sure is loud and clear. Is that I believe in a God that does impossible things. That takes ordinary people in hard circumstances and uses them for his greatness, for his glory. I haven't even looked at any of the chat. I don't even know what you're saying. Maybe you guys all left. I don't even know how many people are on here right now. Sometimes I just got to say it because it's the truth. It's the truth. And I want to say this. We're still moving lower. We could turn at this 4 hour. We could turn at this hourly fair value gap. We could make a higher high. We do have liquidity here. We could have a higher time frame, pull higher, make another pump higher, and then we could make a bigger move lower. That's a real possibility. But from what I'm looking at right here, here's our accumulation. Here's our manipulation. This is our distribution. Now it's completed. Now I would honestly want to see it move lower down to here. If we do a standard deviation, I'm going to say something else, but I want to do this first. If we do a standard deviation from this high to low and we put a target on here, here's one standard deviation, or here's two standard, this is one standard deviation. Here, let me do it the other way because the negative numbers make it a one standard deviation. Here's one standard deviation. Here's two. Look where the 2 is sitting, just beneath the Asia lows. Okay, I like this level. But look, also 1.5. Look where 1.5 is sitting, right at midnight open. I like that level a lot too. I like the idea of it purging London lows, filling the opening range gap, and then consolidating the rest of the day. So basically, here's what I think is going to happen to the rest of the day. Accumulation, manipulation, distribution, somewhere around midnight open, London low, Asia low, somewhere in here. And then we kind of come back right around the 4 hour. So something like this. That's what I think it's going to look like. Now, is it going to look perfectly like that? No, probably not. It could look like this. Right? It could look like that. How it gets there can change. But we got our initial move that I'm happy with. There's the breaker. I probably could have executed. I'm happy with the trade. I'm happy with the win. But if I view everything that I do with excellence, I probably need to go back and analyze what I could have done differently. I don't think there's anything wrong with my execution because your entry level or your entry, because your entry is probably the least most important thing. The most important thing is making sure you have the direction right. All right. direction, number one, and proper stop loss placement, number two, and then I would say your entry, number three. So we had the direction right. Our stop loss we had correct. Now entry. We could have said, well, let's wait for the retracement back up into this breaker area, which would have been right here. And I could have got a better entry. That could have been an option. I could have waited for this close and then get it on this retracement into these levels here and take an entry there. That would have gave me a better position. That would have gave me an extra 7 handles, but 7 handles is not significant. So I could have done something like that. If I missed all of this and I was concerned on the higher high, then I could have taken this trade right here. Get in here on this green candle into this fair value gap and take your entry right there. That would have been an entry option number 2. We did play this whole thing right here. But look how we've not moved aggressively since then. So I got out here at 10:04. Somewhere in this candle, I think. We did make a lower low. We hit the hourly. But look at the difference between this fast move and now just this back and forth. All right, I've said a lot and I haven't looked at the chat at all. Let's see what's up. BC, you take a different entry model. Where did you take this trade? Did you get in? Gearson, welcome. How you doing? Marcus, what is Trump doing? I have no idea. Do I see any other trade setups today? I would say if this continues lower, then you could probably take a retracement trade. Meaning you could use these up close candles as order blocks, and when price comes into the order block, you take a trade to go lower. So every time we have a retracement up to the previous low, you take an entry. You see that? See how this low meets that high? See how this low meets that high? You can take these as your entries. If we see a continuation lower and it turns into a trending day, which we're at all-time highs, if price really wants to continue lower and it wants to go all the way down to 4, because it could go all the way down here. That's a real possibility. Back down to all-time highs or the previous all-time high area. Midpoint of yesterday's range is all the way down here. There's a lot of room for price to really run if it wants to. It also could just consolidate because it's a no news day. But let's assume it's a trend day. If it in fact is a trend and we start seeing price do something like this, basically you get in where those black lines are when the price is moving up to it. You take your entry and you put your stop at the previous swing high. So it looks something like this. And then you can decide how low you want to go. That's what it would look like. Sometimes it will go past, let's just say you did it for this one, okay? Maybe you did that for this one. Sometimes what price will do is it didn't want to respect this one and it wants to respect this one. So price will come up to that second one, even though we had another one right here. So you just got to be careful on where your entry is based on your correlating PD arrays and what's to the left. And as you analyze that, you could take another opportunity. So there's always trade opportunities is what I'm saying. Taven, I think I just explained where I'd put the stop, right? I think that was pretty clear. Hopefully you understand that. But that's only if we're in a trending market. So for example, if we look at yesterday, right here, this period of price action was trending, right? We started moving higher. We went to all-time highs. We took that trade, and then it still went higher. But look how in this trend we respected these candles, okay? Look at this. Down close candle here. We move above it. Where is this? Okay. Look at this high. That's where we would draw our line. Price moves above here. When we come back down into it right here, that's where we would take the trade. Now, this is our primary order block, but look at this. There's another smaller order block in here. And look how price was respecting, for the most part, this area. And then what do? We move higher. So now what we can do, let's say we missed that one. Now we put an order block level here. Do we reach that one? No, it actually just continues to push higher. So now we can put one here on this retracement. Look what price did here. Came up higher, came down, respected that order block, that down close candle there, and then what does it do? Moves higher again. Here's another one right here. Does it respect it? Yep, it did. It did respect it. It went a little bit lower, but then it moved higher again. At some point, it stops working. At some point, the market changes and shifts or wants to do a larger retracement. And so that's the biggest thing you got to be careful about when you're doing stuff like that, is you don't necessarily know when the market's going to want to do a deeper retracement and run your stops. So this was an example of what a trend day could look like. Is it perfectly like this? Is it, textbook? No. The market's almost never textbook. You got to be able to read that and understand what you're looking at. Trump speaking is not news when I'm referring. Trump speaking is Trump speaking. Avi. The giveaway accounts give the opportunity to complete the challenge only. Correct? No. If you pass the account, you get a funded account, Carrie. Okay, for those that did, could you explain what an inversion is, Mike? Sure. An inversion is right here. This to our left is a fair value gap. Large, beautiful. Okay, what is that also overlapping with? It's overlapping with this down close candle. Beautiful. Now, normally, in our example that we just talked about, you would take a long right here. But maybe you're like, you know what? I think it could go lower. So what do you wait for? You wait for an inversion. An inversion confirms price moving higher. Where's our inversion that we would take the price on? In this case, here is one that you could take. It's a very small one. The other option is to go from the 1 minute to the 2 minute to give you a better one. Look at that, much better. So this is the 2 minute fair value gap. 2 minute here. This is a 1 minute fair value gap here. We went up to this 2-minute time frame, and guess what we see? A better fair value gap. This is a textbook inversion. Now, in this fair value gap, we see price come down into, find support, and move higher. In this scenario, if we thought lower prices, it should come up into this fair value gap, find support, and move lower, but it doesn't. It inverts that fair value gap and closes through it. When it closes through it, that's an entry for a long in this case. Why? Because it swept liquidity here, came into and rebalanced a fair value gap, tagged a order block, and then aggressively reacts to that level, giving us an inversion. Take our entry here, stop loss below the fair value gap for a close, and we target these highs. So you would get, in this case, 7 handles in 3 minutes. Now, do you take 7 handles? Maybe you want to wait and run higher. You can. Ravish. YouTube University. No, ICT concepts is what I learned, and then after I learned his concepts and I wanted to learn what other people refined from him, I bought several courses. I probably have bought 6 to 10 different courses over the course of 3 to 4 years. Was one of them the answer? No. Were all of them helpful? Yes. Was I disappointed in some? 100%. Was I impressed by others? Yes. But none of them were the silver bullet, one answer to everything, but all of them played a part in my journey. I joined his subscription, Money Making Joe, for a short period of time. And then I don't do anything with him anymore. I don't do anything with anybody, actually. If there's somebody I want to learn and I want to know their strategy and I want to refine it and take it for my own, I'll pay for a course. Even to the, you know what, the last one, I'll be upfront with you guys. I still buy courses. I just bought one this year. I bought T-Trade's course. I'm not in it anymore. I learned what I wanted. I got the concepts down, and then I stopped. Because, I mean, there's always a gate to people sharing the details. And what I want when people are teaching a concept is I want to know their real insights of what they're looking for. And then I say, all right, do I like that? Is that helpful for how I trade? The answer is yes or no. For T-Trades, the answer is no. I don't use how he views price action and how he talks about order flow. How he talks about order flow, I like. So I incorporated some of that into my trading. But his model for trading, I don't trade his model. I just don't like it. But I wouldn't have known that unless I actually went in and spent the money to find out. You see what I mean? So I'm always a learner, will always be a learner, and will always be testing other people's stuff as I'm refining my own. I'm constantly refining mine. And what I've learned so far in my own trading journey is that it's more about, let me say this, it's less about a model, it's less about a strategy, and more about understanding order flow and market structure. So if there's something that you really need to grasp more, it's market structure. You can enter 1,000 different ways for the same trade. BC was just mentioning that he I'm sorry, I just drawed a blank. Mentioned that he looked at the same thing, but he took a different entry. There's a million different entry ways. But being able to read order flow and understand what's likely to take place is extremely valuable. Here's an example of an order block right here. What did we do? We came up into that order block, respected it, and moved lower. This is a dodgy area for price. Are you saying dodgy as in the trader dodgy, or as in you don't know if this is a good area for price? All right, look what it just tagged. This is a great area for a reversal. Midnight open and the new day opening gap right above London low. So we could see a retracement maybe to this order block right here and then continue lower. Or maybe it wants to sweep liquidity. But either way, nice sell-off here. Where my weakness in trading is nobody can teach me this part. This is literally something I have to overcome myself. And that is learning to hold trades longer. There's no course that's going to teach you how to hold trades longer. You literally just have to do it. You gotta suffer through the uncomfortable feeling of not closing a contract and it potentially running back to zero. You have to learn to sit through that. And that's something that nobody can teach me. It's something that I have to get myself. I was very proud of myself yesterday. 122 points. That's what we won yesterday. We held our trade for 122 points. Today, not so much. Not so much. I probably could have done a much better trade management. Now looking at this, obviously hindsight is 2020, but I could have sat through that uncomfortable feeling longer, and I didn't. Where was it? It was 1 minute. It was right here. We ended selling. So could I have sat through another 20 minutes? Could I have been uncomfortable for 20 minutes to see it move lower? The answer is I need to say yes. I need to be able to say yes. In this case, today was not the best. Did I follow my plan? Yes. Did I take my trade based on my plan? Yes. Did I sell based on majority of my position based on my plan? Yes. But I didn't allow my runner to run. And that allowing your runner to run is where I would have grown more by allowing it to run even to break even than closing the trade. Right now, I'm not getting the benefit that I'm not growing right now as a trader. In this moment, I'm not growing as a trader. If I would have held that position and let it play out, whether to break even or down to the new day opening gap, I would have put myself in a position to develop the strength of holding, and I didn't do that today. Could I have re-entered here? No. Yes, I could have. Do I want to? No, because that's not part of my plan. I don't want to re-enter a trade. And I'm putting an emphasis with you guys on make a plan and stick to the plan. Make a plan, do the plan, follow the plan. Doesn't matter how you feel, follow the plan. If the plan is complete, that means you're done with the plan. That means you don't keep trading. Yeah. There was a ton of downside targets, and I got cold feet, and I pulled the plug way too early. And that is part of my own trading journey that nobody else can solve but me. There isn't a strategy, there isn't a course, there isn't material that's going to get you, is going to make it any easier. It's literally something you have to push through. It's like eating vegetables. You know you got to do it, so you do it. It's not fun. I mean, I like vegetables. Not all vegetables. I'm not a fan of cooked green, red, and yellow peppers as much. Yet I put them on my Chipotle bowl every single time with lots of sour cream. Lots of sour cream. The point is, you just got to do it. And that's kind of what I'm telling myself in this video journal that I'm having right now with you guys all on the other side of the screen. I'm more disappointed that I didn't hold, because now I'm technically done trading for the day. Because I didn't allow myself to sit in that uncomfortable state, I now have to sit in a different uncomfortable state to further my education, to further my development as a trader. And that uncomfortable state is not taking a trade when I want to take another trade. Do you see what I mean? So there's always an opportunity for growth. In this case, I really don't want to do this opportunity. I'd rather have sat in that uncomfortable state and let the trade play out. But now that I closed the trade, my plan has been completed. Maybe a new thing comes up in another session. Maybe around 1 o'clock we see a sweep of a 4-hour swing low and we see displacement to the upside. That could be an opportunity. But for this session, it's pretty much over. We could be forming a consolidation period for a trade at 11. That's a possibility. But honestly, if I'm looking for a trade now, it still has to be lower lows. So I have to deal with my own decisions of selling early, and now I have to sit on my hands and build that muscle of not taking another trade. Is it wrong to take another trade? I mean, is it wrong to take another trade? The answer is no. Is it wrong to take another trade? No. I mean, we're traders. We make money trading. But if you struggle with not being able to quit, then the answer is yes, it's wrong for you to take another trade. Because you have to be able to say, no, I'm done, I'm walking away. And most people can't. Most people can't walk away. I was wondering what you're saying, because I'm like, oh, well, maybe he's holding right now. Because there's Asia lows. London lows are right here, though. Unless you consider 3 a.m. your London low. Yeah. Lesson learned. Well, lesson received, I should say. We'll see if I've learned my lesson. But, all right, so I want to ask, for those of you still on the stream, Vintage Trader, I know you did. You said you had something. If you if you made a plan that you're going to follow, not your trading plan, but the plan of how you're going to approach trading, drop that in the chat, and I would love to take a look at what you guys are going to do. So, for example, me, I'm going to have a pre-market plan on the trade that I'm planning on taking. all premeditated, pre-thought through. I'm not doing any impulsive trading. It's going to be thought through and planned. And then I'm following my 4 rules. My 4 rules are no trading after 11:15. I only take my model. I don't average down. And my stop loss, my max daily loss is $250. Those are my 4 in trading session rules and my basically the plan I'm going to follow. So I executed on all of those things today, and my plan has been executed. So technically I should be done for the day. So for those that created their own plan, drop it in the chat. I want to hear it. So if things happen early, then 10:45 goes away. What is it about 10:45 you usually like? So sometimes, Vintage Trader, the move will happen at the 10 a.m. macro. In this case, it happened. We took our entry here at 9:42. So the trade happened at the 10 a.m. macro. Okay, right here. What happened? We saw our entry, we saw our opportunity, and the trade moves in this direction. Sometimes it doesn't happen at 10 a.m. Sometimes it continues to stay in high resistance liquidity, seek and destroy, consolidation during that 10 a.m., and then the move is made at 11 a.m. So if it doesn't happen at 10, you look for 11. Sometimes it doesn't happen at 10 or 11, and it happens in the PM session. That's so hard for traders. It's hard for me because I'm trading in this period and in this period right here. These are my 2 time frames that I want to take a trade in. And if it doesn't happen here and it doesn't happen here, well, then that means I didn't take a trade. But the problem that most people have is when it's not here, we force something here and we force something here instead of letting the setup tell us when our opportunity is going to be. And I've made that mistake so many times. So many times. Does that answer your question? Current iteration is trading. 1 trade per day with 1 contract. This is for Mike. For a month, forcing myself to be super careful with my trade choices. Okay, Mike, show up every day here and give me the word that you've taken your 1 trade and you're done for the day. Okay? If you make a mistake and you take another trade, admit it. Come into the chat, drop it in the chat, say I broke my rule, I'm starting over. Okay? So your 30-day clock starts over when you break that rule. You're not getting a slap on the wrist, you're just restarting over to build that muscle. BC, you have to be okay with trades going your way that you don't take. Also, when you have a limit on trades or profit or loss, or get away from the charts. But watching and notating and being okay with it, yeah, 100%. That's the truth. For me, my journal today is, dang, I shouldn't have sold that trade. I missed an opportunity for growth. Now, I missed an opportunity of growth in holding a trade. Now I have an opportunity for growth in resisting to take another trade. If you guys can be so present with yourself and realize and understand what you're learning or what your opportunity is for education, it might make it a little bit easier for you guys. Diego, I'm not looking at, I wouldn't be looking at any longs right now. Did anybody else have any rules they're adding? I don't know if I missed it. I don't know how to say your name. I'm so sorry. Chohn. Choen? Choen? Penaris? I hope I'm not butchering your name. I'm so sorry. I'm sorry that you've had 13 losses in a row. That's tough. There's the London low, folks. Ding, 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 ding. That was my original target. Remember when I said that? Remember when I made that comment? Look at this. Look at this beaut. Look at that beaut. 100 handles. I could have had another 100 handles. That's all right. I now exercised a new muscle of sitting on my hands. Taking a day off is not a bad idea on Mondays. There are some good days on Mondays, though. Michael, I'm not looking for any turn right now. Right here, you could do a quick scalp. So go to the 2-minute time frame. If this candle closes and in 2 minutes it gives you a fair value gap inversion, you can take it to that high. Why the 2-minute? Because there's a fair value gap here as well. So when there's two fair value gaps in a row, you don't take the first one because it could stop at the second one and turn around. So that's an option. It running to this high. We just ran a big form of liquidity here. So there's a good probability we're going to see a retracement. So here's a low, high, lower, low. Break higher. How high does it want to go? I don't know. Here's 50%. 50% is sitting right here. I wouldn't target anything higher than this. Honestly, I would just take this momentum here and target somewhere around there, because that's probably what's going to happen right here. But I'm gonna not take another trade here for the mere fact of exercising discipline on my plan. Lawrence, 3 trades per day. No 50-50 trades. Wait for confirmation. All right, my friend. Let's make it happen. 3 days per day is what I'm going to keep you accountable to. Now, I'm going to say something. This is not meant to take away from anybody's victories they're sharing on the chat, okay? But I want the rest of the chat to know that it's very easy to share wins on the chat, and it's much harder to share losses on the chat, okay? So you're going to see a lot of people share their wins, but they may have taken, that's why props to the person. I can't tell by the photo. I'm not sure if it's a man or woman. that shared that she had 13 losses. I'm saying she because I think it is a she. That she had 13 losses anywhere in a row. That takes a lot of gusto to be able to put that on stream. That's a big deal to be able to share that. So I admire that. But just realize that if somebody shares a win, they are not obligated to share the losses they have had in that process. Maybe they didn't have any. I don't know. I'm not taking away anything from anybody's wins here. But it's very easy to feel left out when you're reading the chat and you go, wow, they got a win. They got a win. I had a win, but I also had 13 losses, right? Just keep that in mind. Try to avoid the comparison game. Oh, Victor, I didn't do that. It's right here. Take a snapshot of that. For anybody that has been here for any amount of time, I do this probably once to twice a day. All right. So the fact that we hit a London low would give me more confidence to potentially look at a larger retracement move somewhere in this vicinity. It doesn't mean you're taking a long right now. I'm just saying the option to take a long, I think, is on the table. If price action presents itself. So why do I say that? Take a look at the 15-minute time frame. What do we have? We have a fair value gap right here, a fair value gap right here, and large wicks right here. Let's go to the 30-minute time frame. We have a 30-minute candle closing in 5 minutes, and then we're going to have a big 30-minute fair value gap. This has a high probability of being tagged. So at least a move to the hourly BISI is a possibility right here. You go to the hourly. What do we got on the hourly? Hourly hasn't even closed yet. So we're going to be printing another hourly candle. And is that hourly candle going to have zero wick? Probably not. It's probably going to have some sort of wick higher. How big? We don't know. Maybe it's not a wick. Maybe it's a full body. My point is, because this candle's closing, the new candle is going to retrace to some degree. It's going to move higher to some degree. Maybe it's the hourly BISI. Maybe it's more than that. But I would probably not bet more. I would probably bet around that hourly BISI. So going back down to the hourly, that's what you can see here. Is there's a high probability we're going to hit this area here. And then from here, you're going to have to make that judgment call on if there's anything higher in the works. Hey, John. Yep, post the losers. Do it real quick. Go in and out. Do a win and do a go short right here. And then it's probably going to work out. Hey, if you don't lose, you don't lose. But I would say that's probably not the majority of people on here. So that's what I was trying to say, John. Is to make sure people understand to take those wins, be encouraged, but not to compare. If you want to be part of the cool kids, then take a loss. My concern, though, for anybody that wants to take along is that this area could be consolidation. We could consolidate here for a little bit. It might act as if it wants to go higher, but then come right back down into the range. So I think I'm probably betting more on the accumulation phase right now. Rafi, betting it's going to drop to 850, huh? Betting 850 drop. That's a lot right there. Why 850? You're thinking it's going to come back all the way down to roughly the all-time highs. That would be the fair value gap, the hourly fair value gap sitting right there. It could be. We could also consolidate in this range. I mean, that's a real possibility. Now that we moved away from the high, though, if we move towards this area on a higher time frame, I would not, on a higher time frame, I would not expect this high to be broken immediately. I would expect a rejection somewhere in the upper half of that wick on the hourly time frame. So the way I'm going to view this in the future is this from an hourly perspective. If we're bullish, we turn into a bullish. I'm expecting a rejection somewhere in that upper half of that wick to then give us another move lower to set some liquidity up here. Why do I say that? So look at this right here. Look at all that liquidity sitting there. That's set up to be ran. Okay? Look at this liquidity. What did it do right before the drop? It ran it. What did we do here? We made a high. We moved lower, and before we ran this high, what did we do? We made a new high, moved away from it, made a lower high, moved away from it, and then what did we do? We aggressively ran 1, 2, 3 highs. So it wants to create these high opportunities to then run through them aggressively. That's what price does. We got a high, it swept, made a low, made a lower high, made a little higher high, and then we run it all, and then we move and we run these as well. That's how price moves. So I would want to see a rejection wick here, and then look for an opportunity here. And then if it gets all the way down here, maybe look for another big move higher. So we're going to call it a day there, folks. Oh, I'm going to call it a day there. I got some stuff to do. So thanks for hanging out with me, guys. Hopefully you had a good time. It came across correctly, Vintage Trader. Andrew, no trades today for you. No trades for me. No, we took a trade already. Took a win. We took, did we take 1 or 2? I think I only took 1 trade today. Guys, that's 2 days in a row with 1 trade. That's a big deal. That's a big deal. Let's keep it going. All right, friends. God bless. Stay safe. We'll see you all tomorrow. Use the code DTJ if you're looking to get an eval account, or if you want to join the Purpose Driven Trader Academy, you can find that link down in the description. Other than that, guys, God bless. We will see you all tomorrow. Bye-bye.